Sales have dropped for the 5th consecutive month here in Vancouver, but there are some charts out there that may show that we have hit the bottom of the market when it comes to sales. Consumer confidence and the real estate outlook are starting to improve, and I'm going to be going over that data as well as showing you that affordability, despite what you may think, is starting to decrease at a rapid level, where housing is now more affordable than the last several years and is on a trajectory downward. And with that affordability going up, and what I'm meaning by that affordability is not home prices, but your monthly mortgage payment, but how that can spur on a more heated marketplace in terms of improving sales. And then going over some of this other data that's more specific to Vancouver to show you that yes, sales look to be bottoming out, and what are some of these signs moving forward in terms of the competition. We know that in the marketplace right now, being a buyer, being an upsizer, it's great, but with every single market, there is a bottom, and I think we have bottomed out, and that is just something for you to keep in mind when you are making those decisions. These low markets and these slow markets don't last forever. At some point, things are going to increase, and I highlighted in one of my previous videos that all that we needed in the marketplace was some stability. That first step was Mark Carney being elected as the official party leader here in Canada, and we can see with the consumer confidence index, we have had a bump upward, as well as the real estate outlook. And here in Vancouver, because a lot of the voting base here were Liberals or NDP that moved over to the Liberal side, we have a lot of Vancouverites who are happy, who have that confidence in the country, and now are willing to transact. I know that colleagues around the Lower Mainland, both in the Valley and here in Vancouver, are starting to see more activity in the marketplace, more buyers willing to write offers, because what we're seeing right now is just a massive tentative buyer pool, but that is starting to improve. So let's get into these charts so that you can make an informed decision to help you with your real estate goals. The first charts that I want to pull up here, and you're going to see it on your screen, is the Consumer Confidence Index and the Real Estate Outlook Index. And this is what has been plaguing the market from my point of view. And that's why it's really important to understand Canadian macro and microeconomic data and not just relying on the board stats, because these macro data points here really help us prognosticate buyer behavior, seller behavior, and where the market is going. And you can see that essentially since October of 2024, we've been dropping like a rock with consumer confidence, but we have bottomed out here, and we've had an uptick now in terms of May, where we have shot back up on a pretty nice V-shaped recovery, both here on the Consumer Confidence Index as well as the Real Estate Outlook Index as well. Both of these are sourced by Nanos, and you can see that with these quick V-shaped recoveries, it's going to be interesting next month if we can continue to build on that. And if we do continue to build on that, I think competition is going to start to heat up a little bit. Keep in mind, when I say the market has bottomed out, I mean sales, not pricing. There's still a lot of inventory in the market. There's still a lot of selection, and pricing can continue to lag. But as more and more of this inventory starts to get snapped up, then we can start to see the real estate market changing. And we have some other notes on affordability here. And this chart here is the monthly mortgage payment required to purchase a typical home. And when we talk about affordability in housing, a lot of people focus in on the purchase price, but really what people are more worried about is their monthly mortgage payment. How much do I need to spend monthly? And if I can get to that number, it doesn't matter if that price point's $1 million, $2 million, $3 million. If I can stay within my monthly means, then I am okay. And we can see with this chart here that essentially in 2023, the beginning of 2023, we were at a pinnacle in terms of pricing, in terms of what the average cost was for a mortgage payment. And you can see that we have been starting to drop, and in the later part of 2024, it's starting to really drop downward. And as the Bank of Canada continues to drop rates, it's going to make housing more affordable in terms of that monthly payment. And we have a little bit of commentary here where it states, if we get another 25 basis point cut from the Bank of Canada in June, markets currently priced in at 50-50 odds, monthly payments would drop to the lowest since March of 2022. What were seasonally adjusted home sales nationally that month in March of 2022? 54,000, or 52% above levels seen in March. So what that states is, as money becomes more affordable, also Canadians are starting to make more as a whole in terms of their salaries and wages. As that affordability index starts to drop, they're going to have, again, more confidence, and this consumer confidence is going to start to increase, meaning that they are willing to start to transact. So these are all markers that we're going going to really want to monitor. If the consumer confidence index continues to rise, this monthly mortgage payment required to purchase a home continues to drop. These are all signs pointing to a recovery in terms of the market. So it's not always just these board stats that you need to be aware of, days on market, which in Vancouver are completely skewed anyways, but what is going on as Canadians feel with their confidence in terms of making major purchases. As we get into the Vancouver numbers here, you can see that Vancouver monthly sales, as I said off the top, 5th consecutive monthly decline in drops. You can see the monthly change in home sales here in this chart. We had a nice uptick in terms of in October, a nice rebound in terms of those sales, but we have been dropping. But you can see that the last couple months, they're starting to shorten up a little bit in terms of the drop. We have seen that sales are down roughly 24% compared to last year at this time, and we have been on a trajectory downward, and but you can see this peak here on that Vancouver monthly home sales chart. It was not as straight down. It started to even out a little bit, so we're going to have to monitor this again. And I want to preface this, I'm not saying that sales have dropped to its lowest point, and just to preface this, I'm not saying that pricing has dropped. I think pricing can continue to go downward. I'm just saying sales, and we want to make sure that that sales marker does rebound, because eventually if sales start to increase, inventory gets taken off the market, pricing will then follow. So we will have a couple months lag. I know that this commentator thinks that by next year, things will be a lot tighter in these Canadian markets, but this is something to observe here. As we move here again to some of these charts, when we talk about single family home sales or condo sales, black here is 2025, and you can see that other than the pandemic years in 2019 and 2020, in single family home sales, we are at the lowest point in the last 10 years. Condo sales, again, outside of the pandemic, the lowest in terms of both this condo segment and the single family home segment. But something to keep in mind with these new listings, we know that with active inventory, we've had the most amount of inventory we've seen in about 10 years. But this report that just came out at the time of recording today, the flow of new listings coming to market is starting to slow in Vancouver. Seasonally adjusted listings fell an estimated 7% month over month in April, and were down 3.5% compared to last year. And again, this is showing the narrative that sales are starting to be absorbed by buyers, and with that confidence increase, buyers are willing to partake. Again, inventory jumps overall. Active inventory is up 30% year over year and remains at the highest level since 2014, notably in the condo segment. And you can see it in these charts here, the black. We have this next data point. We're well above active inventory levels that we've seen in the last 10 years, and this goes back 11 years. Single family inventory and condo inventory. So when we look at these confidence indexes, we see the affordability is starting to come down in terms of your monthly payment. Confidence is starting to peak up. Buyers keep very aware of these charts, because at some point the market can change, and it can change quite quickly. So if you're continuing to wait for a good entry point, if you're continuing to wait for the best time to buy, you are still in a great position because there's a lot of inventory, but I would be hesitant. I also want to give some advice to buyers out there. I know in this environment, and a lot of people are wanting to cherry pick, put in these low offers, and perhaps it doesn't work on one property, you jump it over to another. Be very cautious of doing that. As the market starts to shift, if you continue to have these types of strategies moving forward, you could lose out on homes that would be a great fit for you. And when we start to see signs of a recovery, even though this is very much in its infancy, we need another month of data to see what's going on here. You just don't want to lose out on something over, $10, $20, $30, $50,000. If you're spending upwards of $800,000, $1 million, $2 million, $3 million on a property purchase, get in there, because in the next video that I'm going to be going over is the housing stats in here. You will reap the rewards in the years to come, but you just also, in certain segments, even though we have a ton of inventory, I've been working with multiple buyers in Burnaby, specifically in the detached market, and there has not been a ton of inventory. And this is in a place where we've seen the most amount of inventory in 11 years. So depending on what your segment is, just have some caution on that overall. The last chart that we're going to dive into is just the Vancouver HPI, the home pricing index. And you can see that prices tick down here again for the fourth consecutive month. But even with this tick down and the largest decline since mid-2022, we have not In terms of pricing, we can see that pricing has ticked down after adjusting for seasonality. The math shows that Vancouver's MLS home pricing index fell 1.5% last month, the fourth consecutive decline and the largest since mid-2022. So again, pricing has not bottomed out. I think there's still some room for it to drop or be pretty flat here. But even with 4 consecutive drops, it hasn't really moved the needle that much. We're still at essentially 97th percentile in terms of pricing, but there are people that are financially strapped. There are a record number of renewals coming up this year and next, and there are people that are financially strapped. So there are opportunities out there, but as we can see, we're very much so in the infancy of these sales possibly being bottomed out, and a couple months down the road here, we could start seeing an effect on pricing starting to stabilize here as well. So until the next video, we're going to go into some more of these housing starts and how that's going to be affected with this recent data. I will see you on the next one. My name is Kyle Mark, your Vancouver Realtor. Make sure you book that discovery call with me. It's in the description below. And whether you're looking to buy, sell, invest, or relocate to my beautiful city, Vancouver, make sure you book that call with me, and I'll see you on the next video.